I just want to say we're going to bring prices down. We're going to make our country safe. We're going to stop people from robbing our stores and hurting our people.
Donald Trump's victory in the 2024 presidential election is set to have a significant impact on both the U.S. and global economies. With his return to office, we can expect a number of policy shifts across various sectors, including trade, taxation, regulation, and fiscal policy. In this analysis, we'll break down what Trump's re-election means for your wallet, focusing on the effects on taxes, businesses, trade, and global financial markets. One of the most defining aspects of Trump's first term was his focus on tax cuts. With his return to the White House, expect a renewed push to lower corporate taxes and simplify the tax code. These tax cuts are likely to stimulate investment in businesses, potentially providing a short-term boost to economic growth. Specifically, big corporations, particularly in sectors like oil, manufacturing, and technology, are poised to see their profits rise. This in turn could result in job creation and wage growth, especially in industries that benefit directly from lower tax rates. Trump's emphasis on deregulation is also likely to intensify during his second term. His administration will continue efforts to roll back regulations across several industries, including environmental policies and labor laws. For businesses, this means lower operational costs, which can enhance productivity and profitability. However, these changes may spark concerns among environmental groups and labor rights advocates. While deregulation could spur corporate earnings, the potential environmental impact and risks to worker protections could become key areas of contention. Trump's re-election is likely to see a continuation of his protectionist trade policies, particularly in relation to China. Expect tariffs on imports, especially from China, to either remain in place or increase. Trump has long argued that these tariffs help protect U.S. jobs and encourage manufacturing to return to the United States. However, the impact of these policies on consumers remains a point of contention, with critics arguing that tariffs lead to higher prices for U.S. consumers. Despite these potential drawbacks, Trump's trade policies could benefit specific industries, such as steel and manufacturing, by reducing competition from foreign producers. These industries could see a boost in domestic demand as tariffs on imported goods make U.S.-produced goods more competitive. The global trade landscape may also be reshaped as Trump pushes for more favorable trade deals with both allies and adversaries. Countries like China, the European Union, and Canada could face more tariffs or renegotiations of existing trade agreements, particularly as Trump continues to advocate for America First policies. Trump's policies are often a double-edged sword for the stock market. While his tax cuts and business-friendly agenda are generally seen as positive by Wall Street, his aggressive trade stance and the unpredictability of his rhetoric often create market volatility. The stock market tends to react swiftly to news about trade wars or shifts in U.S. economic policy, leading to fluctuations that can make short-term investing more uncertain. In the long run, however, if businesses are able to take advantage of the lower taxes and deregulation under Trump's administration, we may see increased market stability and growth, especially if corporate profits rise and unemployment remains low. That said, expect the stock market to continue to be affected by global trade tensions and shifting international dynamics. On the global stage, Trump's second term is likely to cause ripples in international trade and investment. His America First policy will continue to affect trade relationships with the U.S.'s allies and adversaries. Countries like China, the European Union, and Canada will likely face more negotiations, tariffs, and the potential for changes in trade agreements. These countries may find themselves under pressure to agree to more favorable terms for the U.S., especially as Trump pushes for deals that benefit American interests. While some nations will struggle with these changes, others could find opportunities. For instance, developing nations or countries that align with U.S. policy objectives may benefit from greater trade opportunities, as the U.S. seeks new partners to replace or strengthen existing trade relationships. One of the more significant aspects of Trump's fiscal policies is the potential impact on the U.S. dollar. If Trump's policies lead to greater investor confidence, the U.S. dollar could strengthen as tax cuts and deregulation make the U.S. economy more attractive for investment. A strong dollar could have significant global ramifications, particularly for countries that rely on dollar-based transactions or have significant debt denominated in U.S. dollars. A stronger dollar may make U.S. exports more expensive for foreign buyers, potentially reducing demand for goods and services from the U.S. This could hurt U.S. exporters and lead to trade imbalances, particularly in markets that are sensitive to currency fluctuations. At the same time, some countries that have large dollar-denominated debts could face more pressure if the value of the dollar rises. For these nations, servicing debt could become more expensive, leading to economic disruptions in certain regions. Foreign markets are likely to react in various ways to Trump's policies. While some emerging markets might benefit from the U.S. tax cuts and deregulation that encourage global growth, others could experience economic challenges due to Trump's protectionist trade stance and the stronger U.S. dollar. For instance, markets in Asia may experience shifts in global supply chains as Trump's trade policies continue to affect China and other key trading partners. In Europe, countries may look for new trade deals to replace or complement the ones they have with the U.S., especially as Trump focuses more on domestic economic interests and less on international cooperation. The potential for more localized trade deals could change the dynamics of global trade, with some countries seeking alternatives to U.S. markets in response to tariffs and other trade barriers. Looking ahead to the long-term effects of Trump's 2024 victory, his policies will likely continue to prioritize deregulation, tax cuts, and other business-friendly initiatives. These could support economic growth in the short term, particularly for large corporations and high-profit industries. However, there are concerns that these policies could exacerbate income inequality and environmental challenges over time. The question remains, will these policies sustain long-term prosperity, or will they create economic divisions that lead to global instability? A rising wealth gap combined with the environmental cost of deregulation could fuel social unrest and create challenges that future administrations will have to address. To summarize, here are the key economic impacts of Trump's 2024 victory. Corporate tax cuts and deregulation could provide a boost to U.S. business growth, especially in sectors like oil, manufacturing, and technology. Protectionist trade policies, particularly tariffs on China, could strain global trade relationships but may benefit certain industries like steel and manufacturing. Market volatility is likely to continue due to ongoing global trade tensions and Trump's unpredictable trade rhetoric. The U.S. dollar may fluctuate as Trump's fiscal policies impact investor confidence and global trade dynamics. Global markets will adjust to a more isolationist U.S. stance, with some countries seeking alternative trade deals, while others may benefit from U.S. policy shifts. Trump's second term will undoubtedly reshape the economic landscape in both the U.S. and around the world. While the future is uncertain, the changes we expect to see are likely to have long-lasting effects on both businesses and individuals. Keep an eye on how these developments unfold, as they will have a direct impact on your wallet in the coming years.